Hello everyone, welcome to a new video here on the channel. So today we're continuing our Ultimate Beginner Guides to Chart Pattern series. So the principles of patterns in regards to technical analysis, the foundations that most traders will learn in the beginning of their formation. If you've missed the last ones, you can just go check them out. I have a whole playlist here on my channel of the previous ones we've done. Today we're going to go into what are pennants. So before we dive in, guys, just make sure to hit that subscribe button, hit like. That'll help the channel grow. And so let's just go right in here. This is the diagram that I'm using for all the series, where we can see the progression. We started talking about the reversal patterns. We're saving the cup and handle for the end, but we've already covered double, triple tops, bottoms, head and shoulders, wedges, and now today we're going to talk about pennants, which are a continuation pattern. So let's just go into a brief definition of it. So pennants are a continuation chart pattern that takes place after an impulsive move up or down with a brief triangular coiling consolidation before continuing the original move's direction. So while they're similar in shape to a symmetrical triangle pattern, there are important differences that differentiate them. So as we can see, the pennants is basically when we have an impulsive move up or down, and we have a brief consolidation where price is coiling in between two trend lines that are acting as resistance and support, and they're concentrating into an apex point where price is getting more and more concentrated. The swings are getting smaller and smaller until we have a breakout in one direction. Usually we expect this to continue in the direction of the impulsive move, because this pattern, basically what it tells us is that the market is sort of just taking a breather, is just taking like a little break after the impulse move in order to then continue with the prevailing trend at the moment on whatever time frame we're looking at. And it has several parts. What we call the flagpole would be the impulsive move. That's considered the flagpole. Then we have the pennant itself. Then we have the breakout point, which, as we've seen on all chart patterns, this is a recurring theme where we usually see volumes sort of waning when it's consolidating, and then we want to see a high volume breakout outside of the pattern. Ideally, we want to be in the trade prior to breakout. We don't want to just chase the trade once it's already broken out, because we might just be trying to go when the move is already exhausted. But it's smarter to then just wait for some kind of pullback into the broken trend line and just look for some kind of entry without chasing the market. Okay, so in classical technical analysis, we use the height of the flagpole in the pattern as a guideline for a take profit level. So I mean by this, this is sort of the textbook technical guideline used for take profits. Obviously, I don't just guide myself by these things. Like if I see this pattern playing, I'll keep in mind the flagpole size, because that sort of gives me a range to look for. But of course, I'm going to just look at the bigger picture. I want to see what price action we have on the left, if we have any kind of gaps, if there's any important supply-demand areas, any broken support resistance, market structure, etc. So once the breakout occurs, ideally in a high volume confirmation out of the top resistance trend line. If we're talking about a bullish pennant like in this example, then the pattern is confirmed. And like I said before, some traders are going to go right in at the close of the candle after the breakout. However, I don't like to just go in at the top of movements because, usually you're going to get some kind of pullback. There's usually going to be some kind of retracement that's going to give you a chance to get in. You might need to drill down. Like if you're looking at this and this is a 30-minute chart or a 1-hour chart, and you got a breakout and you got to confirm like a close outside of an hourly candle, for example, then you want to drill down maybe on a 15-minute chart or 5-minute, and that'll guide you also to just look for some kind of entry on a lower time frame, which will help you narrow down and make a more precise entry. It's always good to go on a retest of the broken trend line, even drilling down to a lower time frame if necessary, because you want to avoid if this just goes out and then just pulls back in right on the next candle, then that could have been just a fake out and it was not a true breakout just yet. So you could get trapped if you just try to chase it. And so as you see here, what we would do is we take the impulsive move, the flagpole. You can measure it. You can just draw a box or a line, whatever you want. And then you go to the breakout point of the pattern and you just put the same measurement at the breakout point. And then you can use this top of this measurement as a guideline for a good area to take profits if you went long on this trade. So now let's define the key differences between pennants and triangles, because in terms of shape, a pennant and a symmetrical triangle are pretty similar, but there's key differences to note between these two patterns, which are: first, a pennant pattern has to be preceded by a strong up or down move that resembles a flagpole. If there isn't a flagpole, then it's a triangle and not a pennant. Second, a pennant tends to form a shallow retracement, typically less than 38% of the flagpole. A deep retracement after we form a flagpole is indicative of a triangle rather than a pennant, because a triangle forms usually during longer periods of time. A pennant is characterized by a continuation of the upwards or downwards trend. So like I said, usually we get a pennant as just a temporary breather or a temporary consolidation before we continue the impulsive move. A pennant is a shorter term pattern. A triangle pattern usually takes much longer to form. And now let's just go and see several examples here of what we would define as a pennant formation. So this is a 1 minute Forex US dollar Japanese yen chart. So as you can see, this form on any time frame on all instruments. So we had impulsive move down, then we have a brief consolidation. So you can see if these are 1 minute charts, you have basically 12. So this was a 12-minute consolidation, and then we have another break and impulsive move down. And here, if we would have taken a measure, well, you can see that the measurement of this flagpole looks pretty much almost on point to the extension of the move down. So you can see the flagpole was a pretty accurate measure in this case. It might have been a bit shorter, but this sort of gives you an idea of areas to look to take profits. Of course, we need to see what happened here further on the left also. Here it's Ethereum US dollar 1 hour chart in crypto, and you can see here we're coming on an uptrend. We have this move up where we have 5 consecutive hourly candles green pushing up. Then we have a consolidation of 7 hours here, and then another impulse, a very huge candle here breaking out. We can take a measurement of this flagpole and just put it up here, and you can see we reached that target pretty easily. We have here another forex chart, pound dollar, 15 minutes. You can see impulsive move down, then a pennant here forming a sort of the trend lines forming a sort of symmetrical looking triangle coiling up. And I was highlighting over here, this indicator at the bottom is the volume indicator, and you can see over here how when we were coming down here, we had very high volumes. Then during this consolidation phase, you can see how the selling volumes started going down. We had here, and then we're down here. Right in the middle of this consolidation, the selling is going down, and then right at this point when we're on the breakout, look, the big infusion of sell volumes here coming, confirming the breakout here out of the pattern. And then you can see how selling augmented, and then we just had the breakdown here. And then the same thing, you can take a measurement here. You could just measure this flagpole from here to here, and then you can just sort of, I'm just doing this by eye, but you can sort of reflect it, and you can see how we pretty much hit that target right around this area. So that's pretty much it, guys. That was it. This is a very common pattern, and again, like I said, you just gotta pay attention. This is pretty much looks like a symmetrical triangle, but it's a shorter term pattern. It just occurs briefly, just a brief consolidation after an impulsive move, where we expect just the move to continue in the direction of the impulse. If you got any questions or comments, just drop them down below. Make sure to go follow me on all my social media accounts. Make sure you're subscribed here to my YouTube so you're not missing out on any content that I'm constantly putting up. And go check out my website for more information on all the education and content I have to offer, and also on the trading courses that I got available. Okay, so with that, I'll leave you all. Good luck trading this week, and I'll see you in the next video. Take care.